Okay, we are now looking into digital indoor mapping and smart buildings, as the next company is MapsPeople, represented by the CEO Morten Brøgger directly from United States. So it's early in the morning, Morten, but thank you for being here today. And the next 20 minutes is for you here presenting. Sorry. So let's start out with that.
Yeah. I don't know, very early in the morning or in the middle of the night, I would say where I'm born. But thank you so much, Kasper, for this one. Let me do this. I'm going to give a short introduction to MapsPeople, and then we're going to talk a little bit about what are the current most important SaaS metrics that we're looking into. That is also guiding what we're doing and how we're running the business for the time being. So for those who haven't heard about MapsPeople before, as Kasper said, we do indoor mapping. So we're mapping the built world. And there's actually a lot of funny use cases around this one when you start thinking about this one. One of the key drivers right now is that a lot of the buildings that we work in and spend our time in, they need to become smart in the future, which means they need to integrate technology that is more engaging for the people who's using the buildings, but is actually also optimizing the way the buildings are used. And to do that, it makes a sense to actually have a map that you can display some of these results in. Just to give you a few examples of this one, some of the use cases that we're working with right now, specifically for large corporate organizations, is around employee engagement is the category really called. And the simple use case within employee engagement is if you are coming to the office, because we all know we're not coming to the office every day, then you have a chance to choose which building would you like to work in, which floor would you like to work in, and you can then book a table, and it can be a table that can raise or go down. It can have one screen or two screens, and you can see where Kasper is sitting because I'm working with him on some projects this week. I'd like to sit next to him, and in real time on that indoor map, you can see which desks around Kasper has already been occupied because they will be red, and which will be green. And these are the solutions that some of our partners are doing as well. It can even do wayfinding, just like you do when you're outside on Google Maps and other maps. You can also be navigated indoor. Some is also using this to track high-value assets in the health sector. Where is the closest available X-ray machine? It can be used for building sensors, measuring air quality, measuring temperature, measuring how many people is in the room right now. For instance, there's customers who's having occupancy sensors in the lunch area, so people can see if there's too many people, the lines are too long, wait a little bit with going to lunch as well. So fundamentally, what our maps are doing is helping visualize how the building is functioning, how you can find things, how you can use things in a more efficient, user-engaging way. And you'll see that this is quite in a few different verticals. Right now, there is a lot going on around the corporate office. Some of the use cases are desk booking, employee engagement, meeting room bookings. That is going on right now. We have large customers who in that use case is actually seeing that post-pandemic, and with this employee engagement, they can have people come to work, but they don't have a fixed desk. And then they will know how to optimize the real estate. And some of them are looking to save up to 30% of the office real estate because they can see what's being used and what's not being used. Right now, for the moment, a large vertical for us is convention centers. Needless to say that was dead for a couple of years during the pandemic, but that is definitely behind us now, and conventions and conferences are growing rapidly right now, and we are with all the partners we have out there as well. Education, university, high schools, public schools is something that is growing quite nicely as well. And then we have sports and entertainment venues, which was also more or less dead for a couple of years, but they're slowly coming back and they're slowly growing again. And then we start seeing some new stuff in emergency service. The healthcare sector looks small, but there is quite a lot going on right here. Airports and retails are coming back to life as well. A little bit about what we do, because it sounds super simple how to make an indoor map. But fundamentally, we have one of the best technology stacks to do indoor mappings, where you have different layers. In the bottom, we use Google or other maps providers. We work with Google and with Mapbox. Then we get all the CAD drawings of the buildings, and then we start building the logic, the physical and the logic layers of the individual building. And on top of that, we start putting in more of the logic. We have a content management, so you can put in like just where's the bathrooms, the elevators, the cafeteria, other things as well. And then you can put these objects in the desk booking. That could be desks that you can book and so forth. And you can make those dynamic integrations so that you can actually display the current status of the software, the hardware that has been integrated into this indoor map. And a lot of that is also being used in what is the indoor map is also starting to be called like a digital twin. So digital twin of the building, where you can see these things being displayed real life, and you can have multiple services connected to it. In our case, different software solution that is showing real-time status, and different hardware sensor solutions that is showing status into the map as well. So this is a little bit about what we're doing. The market we are working in is already fairly sizable, but it is one of those markets who has a very high growth rates going forward. In the next 7 years, around 45%, reaching more than $55 billion US dollar by the end of 2030. And that, of course, is super interesting. I think the explanation to me why this is growing so much is because the buildings we have has been underinvested when it comes to IT and IT infrastructure, and how to basically make them more available, and how they're contributing into the day-to-day business of the organization that you're working for. And that is coming back now. So you're getting these investments in there. That how can you optimize the outer square footage you have, or how can you optimize the square footage you need to run the business, and clearly the whole sustainability thing around this one is getting more and more important, and we also see the EU regulation coming that new buildings from the year 2030 needs to be carbon emission neutral. So the sustainability, how to measure this, how to work with this, how to collect data from the buildings are getting more and more important. So from 2030, EU has regulated that all new buildings needs to be carbon emission neutral, and a bit later it will be all buildings that need to be retrofitted. And in order to understand this, you need to understand the building, and you need to have a lot of technology integrated into the building to work with this and to optimize this. And that's why the market is growing very nice. And I think it's also super important to us here that the different use cases, specifically when we speak to Gartner and other analysts, the specific use cases which has demand and which positively impacts the business in a good way that is deploying them, is around occupancy, it's around people tracking, asset tracking, it's about wayfinding, and it's also becoming last mile delivery, how like delivery companies can deliver into large indoor areas like a shopping mall, an airport, or other things as well. And these are use cases that we all support with our indoor maps as well. And to that being said, we don't necessarily, we actually very rarely, if not ever, write the application for the end users. That is actually something that our partners are doing. So we have a partner first strategy. So this means that all these different use cases and all these verticals, we will have partners who's developing the application, and the application requires a map, and that is what we are delivering into the platform. So we are like literally like a platform as a service to these different partners, and that's what allows us to serve this many verticals and this many use cases, because we just deliver the indoor map or the digital twin, and our partners are writing the application and doing a lot of the go-to-market efforts towards the end customers. Now, shifting that a little bit into SaaS metrics. I think I took this slide, which is from our Q1 results. That is our annual recurring revenue and how that is going. Because for the time being, annual recurring revenue, or the growth in annual recurring revenue, is for MapsPeople probably the most important SaaS metrics we have. We've invested quite a lot in signing up new partners, making them profitable. We invested in a large sales organization in the US. We invested in APAC as well. And clearly the outcome on these investments is how we're growing our business. And we measure that by annual recurring revenue. It's also the stage that our company is in. We're heading towards cash flow break even and EBITDA break even. And clearly the key driver to do that is to make sure that we grow our annual recurring revenue. And the annual recurring revenue is very much an early indicator on cash flow because we are predominantly prepaid for our solution. So when people is signing up a new contract and it goes live, then it becomes annual recurring revenue. But most of the time, that also becomes cash because we invoice and we collect that cash. And that also means it's an early indicator on how it shifts into revenue, recognized revenue, and thereby into EBITDA and profitability. So to us, this is one of the utmost important SaaS metrics we have. And clearly behind that one, there's a lot that supports that. Clearly, it is how much are we selling through our partners and how much are they putting live. So it's signing up new partners. It's the sales part of that, making sure that they go live and deliver this. It is the churn that is behind this one because that churn will go out of the ARR. We also look a lot on the net retention rate that we have from our partners. Are they staying with us? Are they growing for us? I'll speak a little bit more about this and I'll comment the growth we have later. We look at this, our annual recurring revenue cohorts. And the main reason we did that is because in 2021, we made a big shift in our go-to-market strategy. Instead of selling primarily to the customers directly, we shifted to setting up a lot of these partners who's making the application that requires a map. We went to a partner first channel distribution. And clearly for that, we've been looking at all the business we've been signing up since 2020, 2021. And we're looking at those cohorts. So are those customers actually growing? Is it working? Because that's the whole idea of having a partner first strategy. It's a big effort to sign them up and to get them going. But then you actually have a much bigger accelerated go-to-market muscle behind this one. So we're looking at how are those cohorts since we did that, how are they growing? And you can see from 2021 that the 2.9, the lightest green color we have in 2021, that cohort continues to grow in 2022 and 2023, meaning that those partners we signed up there, they are growing, they're in business that basically falls back to us. And you can see the cohort from 2022 and the cohort, that is also growing nice. We can't see it from 2023 yet, but you can see we already added quite a bit. And we do expect that to grow as well. So we really look at these cohorts to make sure we understand where's our growth coming from and do we get the expected return on investment in signing up new partners. Then we look a little bit about how much does this really cost, this growth. And the way we look at it is we look at the LTV or the lifetime value of the customers. We use 60 months in the period where we calculate the lifetime value of an end customer. So not just the partner, the end customer of the partner. It's probably a little bit higher with the current churn rates we have, which is just below 10%. But for consistency reasons, we have decided that we're using 60 months when we calculate the lifetime value. And then we have the customer acquisition cost. How much does it cost to add a new customer and add this new revenue? And I think there's two interesting things in this graph here. First, the dark green bars is showing the average lifetime values of customers measured over 60 months. And it's always dangerous when you show in an investor presentation graph that is going down towards the right. But in this case, it's actually straight according to our plan. So let me explain why this is. That is because since we shifted in 2021 from direct customers where we had like fewer customers, but they were larger, into partner channels who's actually doing the selling to the end customers on our behalf. They will be adding a lot of the customer, and the average annual revenue from such an end customer is going down. So the fact that we are seeing the dark green ones becoming smaller and smaller is exactly according to our plan, because it shows that the growth of adding new customers into the business is primarily coming from the partners. And that will drive the average deal size down and thereby the LTV down. It will probably continue to go a little bit down, but then it will flatten out as we move out of 2023 and into 2024. The other thing in this graph here is the gray curve. And you can see that it's been going up quite a bit towards the right. That is how many months does it take to recover the sales costs that we spent on getting a new customer. And you can see it's pretty high right now. It's up at 24 months. It is too high to be something that we are happy about. It's still logic because we invested quite a lot last year in building up a larger, stronger sales organization in the US. And towards the end of last year, we also invested in a smaller new sales organization in Asia Pacific. And a lot, we all know that sales and marketing cost normally comes before the impact, which is sales and revenue. So this is taking it up. But this is something we're tracking right now, and we have a lot of initiatives, and we're keeping a lot of focus on it. As I said, it's too high, and it needs to be below 18 months before the end of this year, and I'll rather have it much closer to 12 months than to 18 months. But that might take us a little bit into 2024. But that basically tells us how long does it take for a new customer to pay back the investment we've done to acquire that customer. And if we can get that down towards the 12 months, I will be happy, and I think we'll be in a sweet spot when you compare that to other companies. This slide I also took from our Q1 results, because how is it kind of like go and give a quick snapshot on that one. The first one is the overall annual recurring revenue for the company. And you'll see year over year, at the end of Q1, we had grown 9.3 million in our annual recurring revenue, or 31% growth year over year. But to me, even more important is that in Q1 alone, 5.3 out of the 9.3 was delivered in the last 3 months, or the first 3 months of this year, which means that in Q1 we grew 16% in our annual recurring revenue based on where we ended Q4. So I'm very happy with the acceleration of growth in our ARR, because it just shows the focus we put on it is working well. I'm going to skip the middle one. That's just the same numbers, but for our main product, Maps Indoors. And then again, you'll see we measure our net retention rates. So is our customer staying with us, and can we manage to make them grow? That is super important as well, and we'll continue to measure that. And then again, it's nice to count the customers we have, and you can again see that the customer count has grown a lot more than the ARR in the last 12 months. And it again is just a proof that the partner strategy is working, because they're adding a lot more customers to us. They do have a smaller value, but that is exactly according to plan. Then if we should very quickly, Kasper, just go into what's the outlook and what's the guidance. And we have guided on our annual recurring revenue, as I said, the most important SaaS metric to us, to end the year between 77 and 87 million Danish kroner, which is equivalent to a more than 100% growth year over year. And since we are in the middle of raising a little bit of capital, we also gave an outlook for 2024. And you'll see that we will continue to grow nicely into 2024 to go above 110 million Danish, or more than 40% growth on that. The interesting part on this and how a prepaid recurring revenue business in the SaaS industry like ours is working, you'll see that a lot of the growth in ARR is not necessarily manifesting itself in net revenue this year, because even though it's prepaid, it becomes cash. We can only recognize the revenue for the period that it relates to. And a lot of our sales is in Q4 historically, so that's where it is. But that will mean that we exit this year with around 77 to 87 million in ARR, and you can instantly see that will have a full year impact in 2024. So you see a massive spike up in our recognized revenue in 2024, based on primarily that we're delivering our ARR this year, but also a little bit the growth we're planning on delivering next year. And that also means that we will take in 24 a nice step and land somewhere around profitability on the EBITDA level. So I think this was a little bit of what I wanted to do, and I was asked by you, Kasper, to leave time for questions. So here we are.
Perfect, Morten. Thank you. Yes, let's take the questions. First of all, does MapsPeople have a consolidation or M&A strategy? Maybe also referring to the acquisition of Point Inside or the customers and assets that you made. Yeah.
We do that. That doesn't really go into my SaaS metrics, but we absolutely do have a consolidation strategy. M&A is a tool in our toolbox. As you mentioned, we closed the deal with where we bought. It was an asset deal from Point Inside, where we bought the technology, the customers, and a lot of maps from them, and that contributed with around 8 million in ARR. We did come out with a company announcement on May 3rd. So on May 3rd, we already had 48 million in ARR. So Q2 will be nice just from that point of view. And of course, on top of that is the organic growth. And we are looking and we are scouting on what are the right things. I think for me, the M&A is first around how do we gain market share in more of what we are doing. And then when you gain a lot of market share, you can start looking at, can you add different product features and functionality? Also both organic, but also from M&A. But yes, M&A is a tool in our toolbox.
And if we look at the industry in general, do you see a consolidation across the industry, across the other players, or?
There's been a little some years ago, very, very little recently, to be honest, Kasper, but it's really been some of the larger ones who has acquired indoor mapping providers because they needed that, and the market probably wasn't mature enough. I fail to see that as a great strategy, because if you like hundreds of thousands of employees and then you acquire 8 people who's great at doing mapping, that doesn't really make you a leader. I would say like our partner strategy would be more suitable for that. But that is our job. That's our sales team job, to convince the companies who make these applications that they should partner for the map component and not build that themselves, because they will never be able to deliver the quality functionality at the competitive level we are.
Okay. Let's take a final question. I think this is very relevant right now. So looking at technology, do you observe any significant technology change or AI development in your markets? Are you in a leading position here, is the question.
Yeah, I think the AR probably a little bit less now. I think that probably comes into the product development a little bit later. I think the AR comes in when organizations start collecting different data from their smart buildings and their digital maps, and the AR can actually do something with that. What we are doing and what we have invested in, we've called that automation and machine learning. That is really most of the maps, indoor maps we create, we get the CAD drawings of the buildings from the end customer. And then we invest in automation and machine learning that actually, to a very high degree, converts those CAD drawings into an indoor map, like buildings and stuff. And CAD drawings have like a physical layer and they have a logical layer, even down to the naming and what content is in a different room. So we invested in this. And we have, I think, our largest customer, which is a large US financial institution. A large part of that one is also maintaining these indoor maps when there's changes. And just to give you an example, that this particular one customer on a daily basis is providing between 30 and 90 floor updates every day. And we can all imagine if there has to be someone sitting there making the map, that's very expensive. But these updates, due to our machine learning, it recognizes what has changed and it updates the maps fully automatic within minutes or hours. and then it basically updates the maps and sends the CAD drawing back and confirms that it has been updated. So to us, it's really the machine learning. How do we make sure that we are very fast, with very high quality and very cost efficient in creating the map, but also in how in maintaining all the updates that goes into it. That's where we have done the investment, and they come first. AI, I think, comes later in the smart buildings when the data starts getting collected. Then you will build predicting application that goes on top of that one. But in my opinion, that will just accelerate the demand for indoor maps.
Perfect, Morten. Thank you very much for the presentation and for taking the time to present MapsPeople and answer the questions from the audience. So